So, in March 2025, gold did something pretty wild. I mean, did you catch this? Prices went soaring, like way past $3,000 an ounce.
Yeah, I mean, that's uncharted territory for gold, right? And, it's a pretty big deal.
Huge deal. I mean, seeing that kind of jump, especially in something like gold, which everyone thinks of as a safe bet, it really makes you stop and think, what's going on with the world's finances? Like, what's really happening behind the scenes?
Right, exactly. It definitely seems like there are some big fundamental things shifting, and we need to sort of dig into that.
Exactly. And that's what we're going to do in this deep dive. We've been poring over a ton of reports, expert opinions, analysis, all that to try to figure out what's fueling this gold rush, so to speak. But more importantly, what does it all mean? Like, what does this mean for you? That's what we really want to get at.
Right, because at the end of the day, that's what matters. And there's a lot of jargon and complicated stuff out there, so we're going to try to cut through all that and make it clear.
Yeah, exactly. We want to give you a clear picture of why gold is suddenly, the hot commodity.
It seems like, everything just kind of converged at the right time, almost like a perfect storm for gold. Geopolitical tensions, economic worries, policies changing, all these things played a part.
So let's start unpacking this, this whole why behind gold's big leap. And one thing that comes up again and again in all these reports is the tension, the uncertainty, all the geopolitical stuff happening around the world.
Yeah, and it's interesting because you can see this pattern pretty clearly. Like when fighting flared up again in Gaza, late 2024, early 2025, gold jumped. And then you had President Trump coming back into the picture, talking about tariffs again, and boom, gold goes up. It's almost like clockwork.
Yeah, it's like every time there's some kind of international drama or things start to get shaky, people flock to gold. It's like the go-to for safety.
It is. It really is.
It is. It shows you just how quickly people react when these big political events happen. And when regular investments, like stocks, start to feel risky, well, gold just looks more and more appealing.
For sure. It's the classic flight to safety. Like, things are uncertain, let's put our money somewhere that feels solid. And that's gold for a lot of people.
Speaking of things that make people nervous, let's talk about inflation and what's happening with currencies, because it looks like those concerns, along with the U.S. dollar kind of weakening in early 2025, the dollar index, which measures the dollar's strength, was falling. Those things really made gold shine even brighter.
Right. You have to remember, gold is like the inflation hedge. The idea is when regular money like the dollar starts losing value because prices are going up, gold is supposed to hold its own, maybe even go up in value too. Plus, when the dollar gets weaker, like it did, suddenly gold is cheaper for people buying it with other currencies, so more demand.
So it's like if my local currency is stronger than the dollar, it's a good time for me to buy gold.
Exactly. The global gold market is all about exchange rates too, and those changes directly affect the price of gold. But beyond that, there's this underlying worry about currencies losing value over time. People want something that'll hold its value, and historically, gold has that reputation.
Okay, so we've got global instability and worries about money losing value pushing gold up. But what about the big players, the central banks? What role did they have in all this? Because it looks like their decisions had a pretty big impact.
They did. What everyone was expecting the Federal Reserve to do with interest rates really mattered for gold. Most people thought they'd hold off on raising rates, maybe even cut them later in 2025.
But hold on, gold doesn't pay interest, right? So how does that help?
That's the thing. Gold doesn't pay you anything. No interest, no dividends. So when interest rates are high, it's more costly to hold gold, compared to putting your money in bonds or something. But when rates are low or expected to go down, holding on to gold doesn't seem so bad. It's all relative.
I got it. So if other safe investments aren't paying much, gold starts looking better.
Exactly. And that shift in thinking about interest rates, plus all the tension from trade and tariffs, it created this environment where gold could really take off.
Okay, so stepping back a bit, we've got these immediate triggers, but it seems like there's a bigger picture here too. Like, experts all seem to agree. When things get messy globally, gold is the go-to safe haven.
It's like the consensus. When markets go haywire, whether it's politics, economies tanking, or just general financial craziness, investors want something that feels secure. And gold, with its whole history as a store of value, fits the bill perfectly.
We even saw a quote where someone said investors were looking for refuge because of Trump's actions. Like, they literally used the word refuge. That's powerful.
Yeah, and it shows that these aren't just abstract anxieties. Specific political moves can really drive people to gold. Analysts were saying the same thing. Geopolitical tension, those trade wars, financial markets being all over the place, all that was pushing investors toward gold because it felt stable.
And it wasn't just general anxiety, right? It was specifically things like the conflict in the Middle East that were boosting those safe haven flows.
For sure. Those kinds of events are like catalysts. When you see conflict in a crucial region like the Middle East, it immediately raises the alarm bells about wider instability. And that makes people want to move their money to safer assets, like gold. Someone said it really well. They said that gold has tended to shine whenever markets correct, inflation worries are high, and geopolitical risks are escalating. It's like history repeating itself over and over.
So let's say someone's listening to all this and thinking, okay, maybe I need to add some gold to my portfolio. What are the main ways people actually invest in it?
Well, there are a few ways to do it. One of the easiest, especially if you're used to trading stocks, is through gold ETFs, those exchange-traded funds. They basically represent owning a certain amount of physical gold, but you can trade them on the stock market just like any other stock.
Like, what was it? GLD. They mentioned that in some of the reports, right?
Yeah, exactly. SPDR Gold Shares, GLD, that's one of the biggest and most traded gold ETFs out there. Its value basically follows the price of gold itself. And, no surprise, when gold hit those record highs, GLD did too. They were saying it was up a lot in 2025. Analysts really like ETFs because they're convenient. You can invest in gold without having to actually deal with owning and storing the physical stuff. And we saw a lot of money flowing into those gold funds, like FPDR Gold Trust holdings were at their highest point since 2023.
So it's easy, and you can get in and out quickly. But what about, the classic image of gold bars and coins? Is that still a thing?
Absolutely. Buying physical gold bullion, like those bars or coins, is still a big deal for a lot of investors, especially those who want to hold something tangible, something real. There's no risk of a bank or institution messing things up. And with all this demand for gold, we saw reports of people buying a lot of physical gold. Like they wanted that security of actually owning it. Some people even suggest this 10% golden rule, where you keep a chunk of your investments in physical gold and maybe gold stocks as a kind of safety net against market swings. Of course, you got to think about storing it, insurance, all that. And it's not as easy to sell quickly as ETFs. But for some people, that peace of mind of having actual gold is worth it.
And there was another strategy they talked about, investing in gold mining stocks. That sounds like a whole different ballgame.
It is. Investing in the companies that actually dig up the gold, either directly or through ETFs that follow the gold mining industry, like the Van Eck Gold Miners ETF. GDX can potentially give you bigger returns than just owning gold itself. Because if gold prices shoot up, those mining companies become much more profitable. But, higher potential reward, higher risk. GDX actually saw much bigger gains than just the price of gold in 2025.
Yeah, I remember that. GDX was up way more than the actual price of
Oh, it's like a leveraged bet on gold. But those mining stocks, they're affected by all sorts of things specific to the mining industry. Like, are the mines running smoothly? How much does it cost to get the gold out of the ground? Are there political problems where they're mining? Is the company well managed? All those things can make mining stocks act differently than the price of gold itself. So yeah, you could get bigger gains, but it's riskier than just owning gold directly or through an ETF.
So yeah, more potential upside, but also more to think about, and probably bigger ups and downs than if you just own gold directly or through a fund.
That's a good way to put it. A lot of investors might put a smaller amount of their gold investments in those mining stocks. They recognize the potential, but they know it could be a wild ride.
And this whole thing with gold going above $3,000, this isn't just a one-off, right? Hasn't gold reacted this way before when the economy gets rough?
Absolutely. If you look back at the history of gold prices, they're totally tied to those times of economic crisis and uncertainty. We've seen those big price spikes during major events that made people lose faith in the whole financial system.
Like, what about the 2008 financial crisis?
Exactly. Back in March 2008, when the global banking system was on the verge of collapse, gold broke that $1,000 barrier for the first time. Investors were scrambling for safety as those big institutions started failing and credit markets froze up. The big takeaway from 2008 is that it wasn't just about gold's price going up, it was a clear sign of panic in the financial system. And things only calmed down after government stepped in with massive bailouts, something to remember if we start seeing that level of fear again today.
And then more recently, during the COVID-19 pandemic.
Right. In August 2020, when the pandemic was really messing things up, gold went over $2,000. All that stimulus money in the lockdowns, it made people worry about currencies losing value and inflation taking off, so they piled into gold.
So it seems like those big jumps weren't just because gold was suddenly trendy. They were more like a symptom of deeper problems and worries in the economy.
Exactly. Those milestones in gold prices, they reflected a lack of confidence in the economic outlook. Gold was basically a gauge of how much distress there was.
They even talked about the late 1970s in some of the reports, how there was a lot of inflation back then.
That's a really good comparison. Back then, you had huge inflation and geopolitical instability. Things like oil embargoes, all sorts of conflicts. Gold went through the roof. If you adjust for inflation, that peak in 1980 would be like $300 to $300 an ounce today.
So we weren't that far off from that historic high point.
Not quite, but it gives you perspective. That surge in the 70s, it was all about people losing faith in regular money because inflation was so out of control. And it took some drastic action from the Federal Reserve to bring inflation back down, and that's what finally made gold prices drop. It shows that after these crisis-driven peaks, once the underlying economic problems start to get fixed and things stabilize, gold prices can come back down.
So those huge price spikes, they're not necessarily forever.
Right. History shows us that after those crisis-driven peaks, once the economic problems start getting addressed and stability returns, gold prices tend to moderate. We saw that after the 2011 peak, which was driven by the European debt crisis, and again after the initial surge during the pandemic. But it's also important to remember that gold's overall trend has been strongly positive since 2000, with these surges happening around major global crises.
Okay, so we've talked about global tensions, inflation fears, and looked back at history, but the reports also highlighted specific things that central banks and governments have been doing that are helping push gold prices higher.
This is a really important part of the story. Central banks around the world have been buying a ton of gold in recent years, and that's having a direct impact on demand and prices. This is unprecedented, this level of central bank buying. And it's not just about pushing prices up. It might mean we're seeing a shift in how global reserves are allocated, moving away from the US dollar. That's something to consider when you think about diversifying your own investments.
Yeah, they were talking about record-breaking gold purchases in 2022, 2023, and going right into 2024. Why are central banks so hungry for gold all of a sudden?
It looks like they're mainly trying to diversify away from the US dollar. They don't want to be so reliant on one currency, especially with all the geopolitical stuff going on and the possibility of sanctions. When Russia's dollar reserves were frozen in 2022, it was a real wake-up call for a lot of countries.
So they're trying to reduce their exposure to the economic and political decisions of any one country.
Exactly. Gold is seen as neutral. It doesn't matter what any particular country is doing, economically or politically. Big players in this gold buying trend are China, Russia, Turkey, and India. And analysts think central banks are going to keep buying gold for years to come. You have to wonder, with all this buying, are we seeing a shift away from those Western-dominated financial systems? It's a big question.
It's interesting to think about these powerful institutions playing such a big but often hidden role in the gold market. One report even called central bankers the unsung heroes of gold's recent gains.
They're quietly driving a lot of this.
Yeah.
Their constant demand provides a really strong foundation for gold prices. And like we were talking about before, monetary policy and interest rates are a big deal too. The Fed hitting pause on rate hikes in early 2025 and everyone thinking they might cut rates later, that made holding on to assets like gold that don't pay interest seem a lot better.
Right, because like we said, lower rates make it less costly to hold gold. It's crazy how all these different factors are connected.
It is. And it's not just the Fed. If other central banks start easing up on monetary policy too to try and boost their economies, that's even better for gold. Historically, when real interest rates are low, gold has done really well.
Now, the last piece of the puzzle seems to be government policies, especially when it comes to trade and tariffs. How does that fit into the picture of rising gold prices?
Those government policies, especially the ones about international trade, they can create so much uncertainty in the global economy. And like we've seen, uncertainty makes people run to gold. The tariffs Trump was putting in place are a perfect example. Those unpredictable announcements, they not only made the stock market go crazy, but also caused some really weird things to happen in the gold market.
Yeah, what was that about gold futures in the U.S. trading at a higher price than the actual spot price of gold? That was strange.
Yeah, totally. It was because everyone was expecting tariffs on gold, so there was this mad rush to ship physical gold into the New York COMEX vault in late 2024 and early 2025. Traders wanted to get their hands on gold before any tariffs hit. It was crazy. That rush to import gold was so big that it actually boosted the U.S. trade deficit for a while because all those imports got counted as goods we were buying from other countries.
So tariffs on completely different stuff can actually have a big impact on the gold market. It's like a chain reaction.
Exactly. They add to that economic uncertainty, and they can even disrupt the physical flow of gold around the world. And it's not just U.S. trade policy either. Import duties on gold and other big gold-buying countries like India can affect local prices too. And even more technical things, like how gold is treated in banking regulations, can make it more attractive to those big financial institutions.
It's like this whole interconnected web of factors pushing gold prices higher.
Absolutely. It's a combination of global forces. You've got geopolitical hotspots, inflation worries, central banks buying up gold, and government trade policies. All these things have pushed gold to these record levels.
So to wrap things up, gold's climb above $3,000, it wasn't random. It was driven by a bunch of anxieties. Geopolitical tensions making investors nervous, those persistent worries about inflation, everyone expecting easier monetary policy, which makes assets that don't pay interest look better, and then those central banks buying up gold to diversify their holdings. And of course, trade policies just added another layer of complexity and uncertainty.
And it's clear that gold's reputation as the ultimate safe haven asset during uncertain times, that's still as strong as ever. This latest surge in prices follows the same pattern we've seen in past economic crises. When things get shaky, people turn to gold.